Good afternoon, folks. Welcome to another market review, daily market review, brother. Don't delete all that. So today, as you can see on the 4 hourly chart, it was an ugly range bound day, which was expected, and which is why I was not trading this. Prices stuck in a premium, and it tried to rally, run the buy side, but it find resistance at the 4 hourly rejection block and the old 4 hourly buy side wick CE, which was already rejected in the first place. Now it's stuck, and you could have expected, I don't know if you guys traded this, but you could have expected um, a range bound market today specifically, as there was no news. It's been slow already, and such. I hope you guys avoided trading this. Now, when looking at Nasdaq, because it tried to run the buy side and failed again, the question really is like, how many times can this try to run on buy side liquidity and fail? So it tried one time, second time, and now it formed a new rejection block, and the whole New York session was rejecting that rejection block. Now, because it's consolidating in the premium, my eye goes right into the 50-minute sell model, as it was mentioned yesterday, the trap shorts here on the 15-minute, which is smart money reversal, original consolidation, and there is an engineered liquidity on the hourly. So my eye actually goes down there, but we'll see what we get tomorrow. So let me get down into the lower time frames and see what happened. So today I really didn't watch market that much. I saw the initial dump at market open. So this is H4 rejection block from overnight session, and this is H4. I think it's, yeah, this is H4 rejection block from Friday. So initially, let me go down to 1 minute because that's my main focus is. Here, I'll do this. All right. So here, I would say today, the highest probability trade happened at New York Open, which is, you guys already know that I don't trade that, but I think that was the highest probability to trade, as you can see. So initially, market rallied, took out some buy side, traded into 4 hour rejection block from Friday, and immediately after at New York Open, it reversed with a displacement, and that displacement is right there. Is a high probability displacement. Why? Because it is forming a smart money reversal. Here, original consolidation down here. Trying to find smooth edges there though. Right about there. And the sell side is at 18,274. Oh, what did I do? So it rated the sell side almost immediately after market opened from the fair value gap, all the way down here, before 940. Oh, I think that completed the day. The rest of the day was choppy. It's offered 36 points, which is fairly good because you don't get a drawdown whatsoever. And also, if you want to execute in this kind of transaction, you've got to be looking at the dealing range, right? So you got to be short in the premium. So you should be avoiding trading the most recent fair value gap because of that. So it wicked into range EQ, sold off, completed the sell model. Going into the afternoon session and silver bullet, it was choppy. You can see how much consolidation that's been going on here. I'm sure there are like S&T divergences in between assets. Let's take a look at that. this price action, let's see if we can find any S&T divergences for the rally. Also at the highs, you can see before New York opened, there is a bearish S&T divergence. I forgot to mention that. Let's mention that as well. So here, took the sell side, so it swept the sell side one time, took it one more time, and then afterwards, it shifted the market structure with this rally. Now we have a couple things here. There is a breaker block here, and the order block is there as well, and it displaced it higher. Because of that, you can expect there's you don't expect a trending day for the whole New York session because it's breaking the bullish order, bearish order flow. Okay, because of that, it should not trend for the rest of the day. So it rallied here. I'm not seeing any SMT divergences. There's a rejection at the CE here, but that's not a lot of meaning. There's not a lot of meaning to that. Here I'll draw breaker block in time. Now it formed a new dealing range here, right? From the sell side to the buy side, there is a short-term dealing range. So after it rallied a couple times, sold off, dealing range EQ, rejection, a couple rejections here, tried to run the buy side and failed again. So here, there's another failure. With that failure, I think that was an SMT divergence, yes. Here is another bearish SMT divergence. You can expect a further dump. In this case, it dumped all the way down into, I think that is kind of like a rejection block. Not a rejection block, I would say. I think it just dumped into the BPR here. The reason I'm looking at the BPR at the extreme is because there's a trap here, trap shorts. That's why I drew that in time. Then with that dump, it actually formed a bullish S&T divergence now on a higher time frame though. This is probably on either the 5-minute or the 15-minute or something like that. Here, I think it's 15-minute. But anyways, so it rejected the BPR, the trap, rallied, and then started consolidating within the range equilibrium. Use that range equilibrium, send higher. You can see that the S&T divergence, not the cleanest one, because he has left equal lows. I mean, this is considered S&T divergence, but I don't like it personally because of the equals. It means that those lows will be targeted later on. So it rallied, failed one more time. So all those failures, though, it has a meaning because here, I'm going to annotate the CE of the buy side. It's failing at the CE of the buy side. So it's failing to run on liquidity, essentially. And the first failure, second failure, and it dumped again afterwards. It took the sell side. Now, this was another trade, I would say. I was watching that price action live because the reason I'm thinking that it was hold on, dealing range. Okay, the reason I'm thinking that it was a trade is mainly because it failed to run on liquidity several times, 1, 2, 3, 4 times, and instead it ran the internal range. So that became a turtle soup. But in that turtle soup, I don't think there's a trade unless it displaces. So here is the first displacement. So that is a trade. It never touched that fair value gap, but if it did, that could have been a trade. There's a breaker block here, which was utilized today instead of the fair value gap. Formed a breaker block, breakaway gap here, the yellow shaded line, the yellow shaded box. From the breaker block, other order block, traded down up into the order block and sold off. into sell side, and that completed the sell side. And immediately after, it rejected there. And guess what? I'm gonna delete all that. On range bound days, I'm gonna zoom in. On range bound days, this is engineered liquidity, right? Because it rejected out the CE here. On range bound days, what can you expect? You can expect market generating liquidity running on one side and then reversing immediately to the opposite. Okay, so here with this raid, you're gonna miss this raid, obviously. You don't want to trade this, but what you want to trade is the turtle soup that raid and target the engineered liquidity. Okay, so these kind of days has to be traded like that. So here with the sell side raid, you get a new dealing range, and here in that dealing range, here you can see it better. Price ran the sell side one time, second time, and the second time was a rejection, very massive wick, rejection. The order flow has changed here. There is a displacement. This is the first displacement, and then it just kept going. Now this price stalled here because it is facing with a thick ass price action here, which is horizontal consolidation, but it's facing with thick price action. What does this tell you is it's likely to stall there and engineer or generate more liquidity to run up the highs, right? Because it'll need more fuel. So with that rejection, I don't know if there was an S&T divergence there, but let's take a look at ES as well. Here, equal highs, and NASDAQ making higher highs. That's an S&T divergence. That S&T divergence sent the price into range EQ. Now that is a trade for me, personally. Here, I'm annotating the BPR because it's the first discount, alright? Traded into the BPR, rallied, failed here, came down one more time. We're still respecting the range EQ and the BPR. So as long as it respects the range EQ, you can expect buy side delivery. Okay. Then, I wonder if there is S&T divergence at these lows. There should be for a clean order flow. There's none. But as you can see, it became choppy. So here, the first touch, it should have ran the buy side liquidity without coming back down. It didn't do it. It came back down one more time, and that put market into consolidation basically. And for the whole afternoon session afterwards, after this rally, it just basically consolidated at above range equilibrium. Never ran the buy side. So for me, if I was live trading this, let's say I longed either the range EQ or the BPR, it doesn't really matter. The moment I saw price coming down to range EQ and rating the sell side also here, rated the sell side, and there's no S&T divergence, I would say, okay, price is manipulating at around range equilibrium, expect a range bound market or chop around range EQ. So I would have collapsed my trade there and let it go and close the charts for the rest of the day. Only with one condition, I would have kept my trade, which is if ES and NASDAQ formed an S&T divergence here, which was not the case. So I would have lost my interest in this price action if I was trading this. As you can see, how many times it traded into the range EQ and failed to break below. 1, 2, 3, 4, 5, 6, 7 times in total. 7 times. And that indicates the engineered liquidity will be targeted at some point before going any further down. And that raid could potentially be a turtle soup, I would say. We'll see. A lot of range bound here. Like too much back and forth action. So it came down, rallied, came down again, rallied, came down. That's too much. Not a clean ortho. And then there are a lot of wicks. I would say this and this, if you could catch something here, maybe the breaker, were the only trades from today. Also, I'm going to mention one more thing. This is on the 15 minutes. There's a 15-minute BPR. I'm going to mention that because it played an important role today, I would say. I'm going to draw that in time. Go on the 1 minute chart. Uh, 1 second, I think. Give me 1 second. Is it the 1 hour? I forgot which one I was looking at. Anyways, I think it was the 15-minute. Oh, never mind. I just remembered. Let me clean this real quick. Stays. Going in. Okay. Here, the 15-minute fair value gap is what I wanted to mention. Here, as you can see, the whole morning session through the lunch hour, it was rejecting the CE of the 15-minute fair value gap the whole time. And there's a breaker block there as well. There's the breaker block. So it failed. This is the engineered liquidity. It failed to run the buy side 3 times, rather 2 times. I would say, yeah, 2 times. Let's say 2 times. And you could expect afterwards. You could expect definitely the sell side delivery first. And like I was staying on the 15-minute because I saw the engineered liquidity on the 15, and mentioned it in the general chat also. With this raid and the rejection, there's a big rejection here. You can see after the rejection, it formed a rejection block. I was like, okay, I'm looking at the rejection block on the 15-minute because the engineered liquidity is on the 15. Now I would expect a big wick into rejection block, body close above the range EQ, and rally to the engineered liquidity. Now it fell short by 1 tick or 2 from the rejection block, and I think that's why it ended up being choppy. If it touched the rejection block, I think it could have run on liquidity. But it's clean in terms of like, yeah, it is range bound, but in terms of like the range, equilibrium, and stuff like that, it's clean because you can see literally the bodies, the wicks into range EQ, and how this price wants to stay bullish even though it rated sell side 1 and 2 times intraday. So going into tomorrow, I think we're going to be seeing better price action, I believe, just because we have news. Then there's CPI. CPI will definitely move the market. And in terms of direction, I don't know which direction it wants to go. Gone to my head, I would say sell side. I would want to see the 15 minutes here. The 15-minute lows at 71. That's gone to my head though. I'm not subscribing to that idea just quite yet. I want to see it fair displacement, and then I'll be like, okay, this is going for the sell side. As of now, the order flow is staying bearish intraday. Market is trying to run, have a breakout to the upside, fails. Then tries to go for the road lows, it fails as well. But because it's accumulating in the premium, I'm thinking about sell side. I might be wrong. We'll see with the news tomorrow and Wednesday. I think tomorrow and Wednesday will be very eventful. We will see. We shall see. So thanks for listening me today. I'll see you guys tomorrow on the live. Actually, hold on. Before I wrap this up, I want to look at the XY as well. From Sunday's analysis. Okay, so the XY is range bound as expected. It is stuck in between a bullish PD array and a bearish PD array. Let's see Euro and USD. Oh, interesting. Euro tried to rally. Rejected at the CE. There's an SMT divergence though, and a trap. And GU also. Wow. Okay. I feel like so. Although DXY is range bound right now and stuck, by looking at forex currencies GU and EU, I can see DXY breaking down from here. And how far can it go? I think the short-term sell side will be tagged. That's for sure. And then it might form a buy model. I don't know just yet. But if it wants to complete the sell model, obviously it needs to go to trapped shorts low. But as you can see, the range equilibrium is below the previous short-term sell side. So I think it might want to turtle swoop that and bounce from there to tag the daily drawn liquidity. But yeah, I hope you guys find this insightful. I'll talk to you tomorrow in the morning. Take care. Have a good one.